The auto industry is the backbone of Canada's manufacturing sector, supporting hundreds of thousands of jobs and billions in exports, about 16 billion in terms of the contribution of the auto industry in the Canadian economy. But with the new 25% tariff on Canadian cars, that industry is seriously facing a major crisis. How will this impact jobs, trade, and even the price of your next car? So let's break it down. The first thing is that between the US-Canada auto trade war, who wins, who loses? Let's see what the numbers and some analysis from experts can tell us. And I'll also share with you what I think in terms of the policy perspectives that I think the Canadian government could consider. Now, before we dive into the impact of these auto tariffs, which President Trump indicated that they would take effect on the 2nd of April, that is next week, Wednesday. Let's have the key facts. Canada's auto industry contributes over 16 billion annually to the economy, according to Statistics Canada. The US is Canada's biggest customer, buying 75% of the Canadian-made vehicles. The major automakers like Ford, GM, General Motors, Stellantis, Toyota, and Honda operate in Canada, mostly in Ontario. Now, the problem is a 25% tariff essentially means Canadian vehicles instantly become more expensive for US buyers. That could crash demand, cut jobs, and slow down economy. I'm going to share with you some numbers with regards to this from economists and analysts. But I will also say that estimating these numbers is very subjective and it's dynamic because the situation is evolving. So the long-term impacts are very difficult to quantify. Now, in terms of the immediate effects of the 25% auto tariffs, Canadian exports to the US could drop, let's say, by 20, 30%, forcing manufacturers to cut jobs or move production to the US, perhaps which President Trump might be desiring to happen. Now, Ontario, which is the biggest province of Canada in terms of the population, it could lose up to 1 million jobs linked to the auto sector, according to Statistics Canada in the article in the Globe and Mail that was written by Professor Trevor Tombe, who is a professor at the University of Calgary. The auto parts supplies in Quebec, Alberta, and British Columbia could also take a big hit. Now, overall, the impact, let's say if you include the auto sector and other 25% tariffs, blanket tariffs, if they were to be applied, Dr. Tombe estimated that about 2.4 million people across the Canadian economy could lose jobs, and that's a big number. Now, on the GDP, which is the output, total output, which Canada produces, the GDP could contract by about 0.5%, according to Dr. Trevor Tombe, because of these tariffs, and it could worsen the trade deficit. Now, for Canadian consumers, higher prices could be seen on cars as costs increase. For American buyers, new Canadian cars will be thousands of dollars more expensive, pushing them towards US or Mexican-made models or other versions that they might find available. Now, in terms of how this could affect the broader economy, the auto industry is not the only victim here. The trade war could have ripple effects across the economy, and some of the impacts are already visible. At least if I look at the stock market reactions, the Toronto Stock Exchange has been very volatile. Each time the issue of tariffs news breaks out, or President Trump or his administration, they make an announcement, the market is causing more volatility. And what that means is some people may sell on panic, and then lose money, while some people will make money. Now, the US stock market is, I can just use the S&P 500 as an illustration. Today alone, I saw it dropped even to about 2%, by about 2%. But if I look at the charts from when it was high, it has dropped by at least almost, at some point it went down by 10%. And what this means is that if this continues, it can potentially push the US economy into a recession. And even to an extent, I would argue that this might even cause a global recession. And a recession, by its very nature, it means the slowdown of the economy. So you're looking at maybe people potentially losing jobs and other challenges that might cause more pain and slowdown of the economy. It's not really a nice thing. Now, what I found interesting on the US stock market was that I saw Tesla stock was going up, and I think this might be priced in the sense that people might be thinking that, well, if the Canadian made cars are going to be more expensive, Americans might as well now consider buying locally made cars like Tesla and other companies, which I think probably is what President Trump has been saying to spur the American economy in terms of bringing manufacturers of these car companies and even business in the US. Now, according to the US Trade Representative, and this data is for 2025, last year in 2024, US goods trade with Canada was 762.1 billion. And the US trade deficit with Canada was 63.3 billion, a 1.4% decrease from 2023. Now, some economists would argue that if you then include other services, right? Because there are some service companies, like let's say if you're looking at Netflix, for example, Canadians might be watching these films and these shows from Netflix, and let's say YouTube, that is Google, it's an American company. These are some of the companies that, if you include the services, I think the net effect in terms of the deficit, America actually might not even have a deficit. They might actually have a surplus. Now, that's arguable, but in terms of the global ripple effects, Mexico and Germany could gain market share in the US auto sector. Canada may divert exports to Europe and Asia, but this will take time. But we've already seen Prime Minister Carney then, because he declared an election now, the government, now this is a prime minister in caretaker mode, but he went to France, he went to the UK to assure them to build more trading partners and for security cooperation, since Canadian long-time trading partner is now behaving this way in terms of levying tariffs. Now, 75% of Canadian-made motor vehicle exports go to the US, like I said. But if this pipeline slows down, the entire economy will clearly, in my view, take a hit. Now, in any trade war, some sectors definitely will benefit while others suffer. So here is a quick policy matrix analysis to break it down, because I think sometimes people just think that they are only losers. There are indeed other sectors that might win. For example, US car manufacturers in the short term, they might win. Canadian auto industry will face major job losses, so that's a loss. If you look at the Mexican and European automakers, but the caveat from this auto tax is that the cars must be made in America. So those businesses or investors who might be able to then go to America and build factories, but this will take time. I was listening to this former executive from Toyota saying it takes about up to 4 years to construct a manufacturing plant for cars like the ones in Windsor in Ontario, right? So there's a time lag, and I think by that time, President Trump's term will be up. But I think maybe the legacy or the impact might still linger on if he maintains these tariffs. Now, Ontario and Quebec automakers could lose jobs. Some other estimates, like I said, they say across Canada, about 2.4 million people might lose jobs, depending on how the government of Canada would respond to these tariffs. Already, there is a pushback on tariffs on about 155 billion on the US goods and services, some agricultural services, aluminum and steel. But for me, I'm gonna profile my thoughts on this. But clearly, tariffs basically they increase the cost, right, of imports. So if Canada imposes tariffs on the US, it means Canadian consumers are going to pay for that. And of course, I understand that the government of Canada has been saying that some of the tax, the money that is collected from those tariffs, because they indeed can bring revenue to the government, right, can then be used to cushion those people who may lose jobs and those sectors that are really hurt. But I think politically, it might, in my view, look like the Canadian leadership, the federal leadership, the government of Canada, they are weak if they don't respond. But in terms of specific impact of the US and Canada trade war, our economy is 1/10 the size of the US. Let's say, for example, we are looking at, let's say, maybe if we are to put Canada in the US, maybe you are just taking Texas, right, as a state. But the thing is, Canada is vast resources, wonderful people, and it's indeed a great country. It's also, in terms of the population and the landmass, is much bigger. Now, I was just talking about just the economy. It's 1/10, right? So the US economy actually is more diverse. It's the biggest economy in the world, and they have more trading partners. And I think it's something which the government of Canada should definitely consider, because going forward, I think the country should not really have like 75% of the exports going to one country. I mean, that was the situation, but these are the consequences. It would have been hard to foresee this. So I think they should be dismantling of inter and intra-trade barriers across provinces and territories, and also looking for other export destinations in Europe, in Asia, and other countries as well. Now, like I said, I was talking about the stock market increased volatility. That was another impact. But why did President Trump impose these tariffs in the first place? Clearly, political leverage aimed at pressuring Canada to trade concession. You have the US MSCA, that is the trade agreement between Canada, the US, and Mexico. And this has been really going well in terms of bringing investment and making sure that there is very easy flow of goods and services trade across the three countries. Now, boosting US auto production, this definitely, if this is implemented, might encourage domestic car manufacturing, which might bring results on the long term. Then it could have been an election strategy, so he has to deliver and appeal, to his base. So, however, this may backfire as the US manufacturers also rely on Canadian auto parts. So if you're looking at it, some parts they have to leave Ontario and go to, let's say, Michigan or other parts of the world, because the way it's structured, the auto manufacturing sector, is that because of the ease of doing business that was there through the trade agreement, the car manufacturers in Canada, the same car, some parts might go to the US, come back to Canada, and then it would go back as a finished car product. But now, if this is disrupted, it's going to cause an impact, right? Or maybe they have to look for other alternatives for those manufacturers. If some of the parts were being sourced from Canada cheaply, that means they have to ramp up production or at least unleash some innovation of some sort. So, like I said, in my view, how should Canada respond? I've indicated some of the thoughts that I said. I think levying tariffs for dollar, I don't think it's a really good idea, right? Because it basically increases tariffs. Our GDP prices here in Canada. But also, according to economists, the GDP could contract further by 0.5%, cause Forex, the Canadian dollar, to lose value, and there are other impacts. But politically, the government might look weak if they don't respond. Now, I think even though Canada levied 100% tariffs on Chinese vehicles, I think it might be worthwhile to reduce the tariffs, maybe let's say by 50% or some other number, right? So that maybe there might be more investment in Canada as well. The idea was to protect the Canadian industry, auto manufacturing industry, but now the situation has changed, right? Our biggest trading partner, this is what is happening. This is the reality of the world that we are living in. Now, as I said, incentivize EV production to shift towards electric vehicle manufacturing to attract global demand here in Canada. These policies might take time. And like I said, diversify trade partners, Europe, Asia, and Africa, which could be very lucrative markets as well in the future. However, all these strategies will take time. The short-term pain will be severe for workers and businesses, and Canada is currently going through an election campaign period. So we will see who is going to win, whether conservatives, liberals, or whichever party here in Canada is going to win the federal election. But so what should we expect? In the short term, Canadian car prices might also rise, job losses might increase, the stock market, Toronto Stock Exchange might be more volatile. The reason why I mentioned the stock market is that there are quite a number of people who are invested in the Canadian stock market. So if it drops, let's say by 40, 50%, it means basically it wipes out 50% of the net worth of those people, right? Who would have lost money if they sell. But at the end of the day, when we look at the long-term effects, Canada has to shift its trading strategy. US may, of course, reconsider tariffs if they hurt American manufacturers, but it is what it is. Now, a final thought is that trade wars are unpredictable, and history is the best judge. It shows that they rarely work well, end well, and whether you are a worker here in Canada, in the US, or an investor, or a car buyer, these tariffs will impact you. So stay informed and stay ahead of the curve. Make sure you subscribe and tune in to the next video. Thank you so much for tuning in to this video. Bye-bye for now.